California is drowning in inventory, and that's according to the latest statistics put out by the California Association of Realtors. In this video, we're going to figure out what that means for California home prices going into the second half of 2024. I'm Jon Schwartz, an investor and agent in Los Angeles, and I put out the weekly Los Angeles Real Estate Roundup. But once a month, statewide numbers come out, and this becomes the California Real Estate Roundup for July 2024. Right now, we're looking at the California housing market update. That's monthly sales and price statistics for June 2024. This is the latest print from the California Association of Realtors that came out just a few days ago. And getting right to the main story, active listings continue to grow by double digits. This month tallying in a 36.2% growth year over year. That means June 2024 has 36.2% more listings than June 2023. That's a lot. And if we look over the past, 9 years, you can see most of the time in California, inventory is dropping. There was a spell here in 2018, 2019 when inventory picked up. And of course, we had 2022. That was the year when rates doubled and inventory picked up. And now here we are in 2024 with several months of double-digit inventory growth. Let's take a look at some regional numbers. So when we break California down by region, we get some pretty shocking numbers. The Southern California market, where I am, which also makes up 43% of the entire California housing market, is seeing closer to a 40% increase in active listings. The Bay Area, though the numbers are smaller, is actually recording a larger increase at 41%. Central Valley is hitting an increase of 34%. Central Coast is seeing an increase of 33%. And the far north is the low outlier with a inventory increase of 16%. This graph shows the increase of active listings in each region as well as the decrease of sales in each region. And when you put these two numbers together, you really see their compounding effect. It's not just that Southern California has a 40% uptick in active listings, it's also suffering through an 11% decline in sales. San Francisco relatively looks better. It's got its 41% increase in active listings, but it's suffering merely a 1% decline in sales. And if you appreciate this kind of sensible analysis, this would be an excellent time for you to hit that like button. It helps more people see the video, and I really appreciate it. This graph right here does a really good job of showing how new listings replenish housing inventory. Let me show you. The orange lines represent sales. The blue lines represent new active listings. If we take a look at 2021, which was a super hot year, you can see that active sales, these orange lines, are all above new inventory, these blue lines below them. That obviously pulls active inventory way down. But fortunately, since about the middle of 2022, we can see that the blue lines, new inventory, have been taller than the orange lines, sales. That increases overall inventory. And trust me, we've been feeling that. Buyers, sellers, agents, there have been more options on the market. There have been fewer bidding wars. The inventory increase has been felt. But exactly how much have sales declined? Let's take a look. Well, the graph says it sales yanked further back due to mortgage rate volatility. And in June 2024, in the state of California, 270,200 units were sold. That represents a 2.7% decline from last year. You can see here we've been hovering around this 275,000 units sold mark, which is better than we were doing at the tail end of last year, but still well below the roughly 400,000 units sold per month that we were experiencing pre-pandemic. And this graph really fascinates me. This graph shows sales broken down by the price of the homes. And this graph is telling us two things. I'm just going to pop over here for a second to tell you about this chart. What this chart is doing is breaking down homes by price range and telling us the decrease, or in one case, increase of sales relative to last year. So basically, homes under $2 million across the board had a decline in sales, but homes that cost more than $2 million actually had an increase in sales of 9% over last year. So while the very lowest priced homes, these are homes under $400,000, have seen significant declines, 23% fewer sales, 26% fewer sales, have seen significant declines relative to last year. The most expensive homes, $2 million and up, have seen an increase. Now let's hop over to this other chart, the blue and red one, share by price segment. This breaks down how many homes were sold by price segment this year and last year. And what you see is the top end of the market, $1 million plus homes, the share increased 3% from 33% to 36%. The middle price share, that's homes that are $500,000 to $1 million, no change, 42%. And the low end of the market actually saw a decreased in share of homes sold from 25% to 22%. What that tells us is that slightly more expensive homes are selling and slightly fewer inexpensive homes are selling. Now, is that because Californians have become significantly richer in the past year? No. What's happening is that inventory on the lower end is just going away. We are losing homes in California that cost less than $500,000. Okay, we've seen that new listings have been replenishing inventory, albeit not at the lowest end of the market. And so active inventory is higher, but how much higher relative to demand? In other words, how much have we really replenished the California inventory? Well, to answer that question, we look at months of supply, a metric that measures inventory against demand, against how quickly that inventory is being bought up. Right now, there are 3 months of supply on the market in the state of California. At this time last year, there were 2.2 months of supply on the market. So we've seen a nice bump in inventory measured by months of supply. And if we go back to 2021, that crazy hot year, we had less than 2 months of supply on the market. And that situation didn't improve until rates really started to hike, and we saw a pretty steep increase in months of supply. However, if we pull back and look at a bigger time frame, we can see that California is still a very supply-constrained market. Here we are at 3 months, which on the whole is better than 2021, but still lower than our pre-pandemic months, where we were on average closer to 3.5 to 4 months of supply on the market. And look, if you're worried about the California housing market crashing, let me get my head out of the way. Back at the end of 07, beginning of 08, we had more than 16 months of supply on the market. That's what a housing crash looks like. That's not what we're going to see anytime soon. So what does this mean for pricing? Well, as of yet, and somewhat amazingly, this increase in inventory has not really had a dent on pricing. Pricing has been going up all year. Right now, California pricing is up over last year 7.5%, and the median price of a home in California is $900,720. This is the third consecutive month that the median home price in California has been north of $900,000. Fortunately, we registered a slight decline from last month of 0.8%, but we're not seeing the kind of large price drops relative to last year that you'd expect given the large inventory increases relative to last year. Me personally, I feel like I'm in a posture of waiting for the other shoe to drop. I feel like these elevated inventory numbers have to have an impact on pricing sooner or later. And I have 2 data points that maybe support me. Let me show you. Okay, so first we have the share of homes sold above asking price, which fell to a 3-month low of 47.2%. Now, 3 months does not a trend make? Well, I guess you could argue that 3 months does make a trend. At any rate, the point is we're headed in the right direction in terms of homes selling under ask. This metric peaked in April 2022. That's when interest rates really started hiking and it looked like they weren't going to be coming down anytime soon, when 72.9% of homes sold above ask. So I'm hopeful, as someone who wants people to be able to afford homes, that this trend continues to decline. And lastly, I want to take a look at this chart showing reduced price listings. Now, the share of listings with reduced price on the market in California this month was 34.3%, which puts us right here. Now, what is interesting is that that is not very far away from a typical range in our pre-pandemic years. Certain times of the year had more price drops, other times of the year had fewer price drops, but we always hovered around about 30 to 40%. Here's what makes me a little bit hopeful. Right now, the median reduction amount is 4.8%, which puts us right here. Now, if we look at the last couple of years before the pandemic, the median reduction amount was definitely less than 4.8%. Price cuts really climbed during the pandemic. They climbed again when rates surged, but we haven't yet settled back down to a pre-pandemic level. And I'm hopeful that even if the percentage of homes getting price cuts doesn't decrease, at least the median reduction amount will remain elevated so we can get some price relief before the end of the year. Subscribe for more California real estate updates just like this one, out every month. Or if you're in Southern California, subscribe for my weekly Los Angeles real estate market update. I'll see you next time.